We have some massive technicals to look at in this video. I am Dr. Stock, Doctor of Education, and if you ever go to a restaurant run by cows, remember, there is no tipping. All right, we need to take a look at SPY and QQQ for what's playing out on their charts. Also, we need to bring up Netflix because they have their earnings out. And, you know, we even have a connection here to World of Warcraft, if you can believe it or not. So I'll talk about what that is in this video. Let's get right into the charts for this thing. So we're going to start off with SPY. And then there we go. So you can see this Fibonacci that we have here, the 23.6 from the peak all the way down to here from where we're at right now. We are just dabbling on correction territory, that 5% down. I put this measurement up yesterday on the charts to see where we're at from top to bottom on this thing. And we are at negative 4.99%. And then the pre-market hours today, we're down at the 453. So if I try to match that up, the pennies are going to change a little bit for us. We are down under that 5% mark, which could be something that would send us all the way down from peak to trough down to the 38.2. Possibly even if that does keep on going, we could maybe even see ourselves heading all the way down to this 50% fib, which would be 11% down. So that we need to watch this line. Where we're at right now, this is absolutely critical that if we solidly break that 498 line, that we could have 480 in our sights after that. And we need to be watching for where that's going to happen. If we bounce here, like I said yesterday, I can keep saying this, watch that 50. I said watch the 50 on the way down. We broke it, and you can see what happened following that. We want to see what happens should we get a retest off of this, which is right around that 511 mark. And with what happens with over in Iran, which according to what we have at the Reuters, by the way, this is worth putting up here. So let me toss that up so that you can see it. There we go. Well, that's the wrong one. We'll get to that in just a moment. There we go. Tehran plays down, reported Israel attacks, no signs of retaliation. We see down here for Iranian media that they said that the incident was an attack by infiltrators rather than by Israel. So this is what we have as by Reuters right now as of 6:52 a.m. So we need to be watchful for that. And then going on from there, we're getting into QQQ. Since I showed this already, we have that Netflix starts to stop reporting subscribers as a tally of as streaming war is cool. So in 2025, they're going to stop reporting out subscriber numbers. And that is one of the things that rattled the markets besides some soft revenue forecasts that we have. And who else did that? But Blizzard Activision did with World of Warcraft going all the way back. Check it out. This article is more than 8 years old, and that was back in 2015. And why that's significant when it comes to Netflix is because, well, subscriber growth started to taper off after what was called the Wrath of the Lich King expansion for World of Warcraft. And as an old WoW player, I can tell you that those numbers, that peaked right around 10 to 12 million monthly subscribers that they had. I don't know that it's ever really come back. Now, mind you, some of that revenue was replaced by microtransactions, and so that was something that continues to keep the game going over 20 years after its inception. So with Netflix, they have said that they're going to explore other places where they can seek out that revenue. I'm guessing some of that would come from higher cost to the consumer. Some of it would translate to the bottom line with the lower cost that we have, especially where AI upscaling could be involved in that. Also switching from technologies from H.264 to the AV1 encoder. I believe that's also something that can actually save them cost as a massive streaming service like they are. Google could also benefit from such a thing. So there's a lot of reason to be hopeful with Netflix for what's to come for us, but in the near term, man, we're suffering the pain of it along with what else we're seeing in the market. So let's get back to the charts, and I'm going to put up QQQ, and you can see we broke down through the fib that we had right around 424, and the pre-market hours right around that 420 mark. So let's grab the measurement tool, see where that puts us right now. And if we see where we closed, where we went down to low yesterday, 5.81% down. If we go down to where we're at in the pre-market, we're over 6% down. We need to be watching that 400 to 405 level. That's the next thing that we're looking for on the way down. On the way back up, as I mentioned before with SPY and in my videos, that 50-day, can't tell you just how critical it is. I said about the times that we were tagging this, that it was going to be massive support for us if it holds, and if it breaks, that we could see quite a fall from there, and that happened. So like I said, these technicals, absolutely massive. If we look at Netflix itself, you can see with this orange line that's right here, all the way down to 576, whereas yesterday's close was at 610, just how that was received. Now you can see some of that rounded top happening right here. We had that 50-day that was absolutely massive for us. And we also, for the RSI, we're already dabbling into bearish territory. And now this is something that puts us down below the 50. However, I will say for SPY, QQQ, what you see with Netflix, this thin yellow line here's the 200. We're above the 200 on all of them, which is a bullish thing still. So we could have that corrected value come in, staying above the 200, and that could be something that could lead to some significant upside, especially if tensions cool over in the Middle East. Now, mind you, fear that they're going to escalate is going to continue to rattle the markets. We also have to keep our eyes on inflation and government debt and the relationship between those two things and what the Fed has to say as their meeting comes up. May 1st, I believe, is the next time that they meet to really discuss what they see with the economy and the interest rate decision that we have. Most likely still no cut coming our way. Bitcoin bounced off the $60,000 mark. You can see these long wicks coming off the bottom here. I'll try and stretch this out to make that nice and big on your screen for what we see right here. And so where did we go? We went back up to the 23.6 Fibonacci number that we have up here, right at about, let me see, that high price coming in, 65.1. And so that is something, 65.244 is where that 23.6 Fibonacci is. So we actually need to get back up over that. These long bottom wicks are good for us to show that there's buyers coming in at just above that $60,000 mark. Maybe it puts that pressure back on. There's the 50-day right there. And Bitcoin is something that absolutely will trade on technicals to find its place after such a run that it has taken. So we need to be watchful for that in crypto. We need to make it back up above 65,000 in order to have further upside on this. And even if we do, we need to make it back up above 67,000 in the near term to have that further bullishness here. I'm going to stick to what I said. Over 6 to 12 months, we could possibly see that $100,000 figure come in for Bitcoin. That doesn't mean that we won't have pain in between. We did not make the 76, almost 77,000 that I thought we would make in the near term. The Israel and Iran conflict is something that definitely did not help that come to fruition. We've only sold off since then, with finally finding a bounce around that $60,000 mark. So just a few other things that I've been tracking I'm going to keep covering for you. In the near term, for end phase, we fell out of the bottom of this symmetric triangle formation. I'm sorry, not symmetric, ascending triangle formation. So this could still possibly be bullish for us, but in the near term, if we continue to see pain in the markets, small caps are going to continue to suffer on that. Solar is going to continue to suffer. So this is one that could possibly break this double bottom in the near term and head down rather than having that bullish time with that. We are so darn close to having the 50 and the 200 across each other, but that so far that golden cross moment has not quite yet happened. We need to make it back up to those moving averages. If we do, though, if we overtake the 200, if we lock it in, one full candle close above the 200 is really all we need to really start to see some of that significant upside come back into this. So if we see that price strength come back into end phase in the near term, this thing's going to appreciate rapidly from where it's at right now. And the sky's the limit on this one. We'll start to see that 140 to 150 price tag play out, possibly even higher from there. I don't know if that happens yet. If we do get that pain coming in, we could easily be back down to $100 or even $90 per share on end phase, depending on how much pain we have coming in the market and what we see coming through with inflationary pressures and also the interest rates coming down from the Fed. Moving over to Tesla, we broke the 150 mark. There's not a lot supporting us in between where we're at right now and like 125. So that's the next line that we want to be looking for Tesla. If we do continue to sell after 125, we start to dabble near that $100 mark for Tesla, which puts us near this bottom. Now, I think that if we do get down near that $100 mark, that's something that's going to be a massive catalyst for us, or a massive technical signal where we're going to have a lot of buying pressure come back in. So we'll see if we sustain down below 150. In the pre-market hours, we're about 145 right now. So that beats that low price that we had there. So now we're looking for where we find the floor on Tesla. Remember, their earnings are coming up on Tuesday of next week in the after hours. And so that's going to be very important, very critical for us to watch. I don't know that the pain's over. Like I said, I put out a video going from this peak that we had over here and then making a bear flag pattern. We could possibly see that $100 price tag come out for Tesla if the negative sentiment continues for EVs and if the economic situation continues to appear more bleak, especially where automotives and interest rate sensitives are involved, and Tesla trying to find the next part of that S-curve in there. Remember, not all of the pain that we see is at the fault of Tesla. Some of it is on the macro level. And as those macros start to subside and start to move in a more favorable position for Tesla, that's also going to help some of that price appreciation to come back to it. And I will continue to dollar cost average over time into Tesla. Now, I'm going to cap things off as usual with NVIDIA, what we see yesterday. So yesterday in my video, I said that we tagged the 50-day. Yesterday, we actually broke it. We came down and we touched the 50 EMA. Look at this thing. Let me zoom in a lot more so you can see it a lot better. This red right here is the 50 EMA. It's going to react more strongly to the more recent price action that we have than the 50 SMA would, the simple moving average. We actually came down, nearly tagged that one, and then closed up above it. In the pre-market hours, we're going to test out that 50 again. So one candle close below that 50 blue line right there, the SMA, that can be something we're going to sell off a little bit further. We still have this 800 line coming in for us, and that's going to be also strong support. So we have a band of support in here going all the way from 840 down to 800. And don't forget that we have earnings coming up at the end of May, towards the end of May, I should say, May 22nd of 2024. So coming up in about a month from now, a little over that, for NVIDIA for those earnings. And I still think that we're going to have that price run. Something that's going to be mitigating for that price run is where that floor is for the market itself, because the lower the floor is for the market, if that continues to sell off, then it's like jumping in an elevator that's heading down. You know what I mean? If it feels like there's that extra gravity pulling on you, it's much harder to hit those higher peaks. So I do have that $1,000 price prediction out there. And I did say the mitigating factor for that would be if the market sells down, that makes this much less likely to happen. If the market stays the same or heads back up, that makes this much more likely to happen. And with us being below the 50 on the SPY and on QQQ, if we're able to get back up over those, I think easily we hit that $1,000 mark. If we fail to make it back up over those, that could be a further sell signal for us between now and when NVIDIA earnings happen. And so cutting out that floor makes it a lot more difficult to get up there, because that's something that's going to affect the entire market's multiples, and that wouldn't be specific to NVIDIA itself. I do think that this is a 4-figure stock over time. And like I said, we'll watch the market, see if that happens soon, or if the markets sell off, it could be something that delays that 4-figure mark for NVIDIA earnings. And we're going to have to watch what we see, any escalation that we have over in the Middle East. Right now it says that Iran has no plans to attack. Well, I don't know that they would necessarily come out and just say that they plan to attack. So just something to keep in mind. And I hope that you guys enjoyed this video. I hope that you found it informative. If you did, go ahead and hit that like button, subscribe button. And if you really like the content that I have to provide for you, you want to hear more of what I have to say, see my buys and sells, there's a link for the Patreon down in the description. Go ahead and click that, sign up, join me and my community members over in the Discord throughout the trading day. Also, you'll find a link for a technical analysis trading course down in the description. You can click that as well and learn to do technical analysis like I do and learn to benefit in the markets. Thanks, guys, for watching. As always, I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.